Good morning, guys. How's everybody doing? Happy Thursday. Yep, almost the end of the week. Hi, SM.
Yes, yes. Good morning, good afternoon, good evening, everyone, wherever you're tuning in from. Hope you're all blessed. Are you, Mrs. Bridge? You alright?
Yeah, I'm all right. It's cold. It's supposed to be colder. It's gonna be kind of you guys. It's kind of cold in another week, allegedly. That's what they're talking about.
Yeah, it's cold up in London still. It's cold.
Is it negative still?
No, back to the
Okay.
positive, but still cold, yeah.
Okay. Yeah, that's cold. All right, guys. Hey, Matthew. Good morning. All
Afternoon,
right.
Matthew.
All right, we're gonna go ahead and get started. I know the update didn't hasn't popped up on all of the notifications on Telegram. It's a delay for whatever reason, but we're gonna go ahead and get started. All
Yep.
right,
Thing?
all right. For those of you that are joining us here for the first time, welcome. Thank you for joining us. Hi, Deborah. Um, and we are, as you, if some of you guys may have seen the flyer that I posted yesterday, hopefully you guys were able to get some valuable insight for your back testing, for your trade management, your risk management from our last series. um, I'm glad that you guys were able to, join us while we're looking at that. That is a vital part of trading. It's I would say it's one of the most important things outside of the mindset, uh, knowing how to manage your thoughts or whatever. Okay, now it's popping up. Okay. All right, so we're gonna go ahead and get started because we got a lot to cover. I don't want to drag this series out. I want to make sure it's a crash course because we do have a uh, like the more of the fundamentals and more of the details, why, what the differences are on the under my courses on the channel. And so, if you want to know more about, futures trading, look at I think it's like a 5 or 6 day boot camp, explaining futures trading. I'll actually be doing more in the future, in the near future on futures. Um, and so, hopefully, you guys will really like that. I think probably like March or so. It's going to have some really good stuff. But for now, for those of you, like I said, that saw the post that I posted in the Telegram, um, today we're going to be starting a 2 day boot camp crash course to get you started. If you love trading gold, you like to trade commodities, indices, things like that, natural resources on your forex chart. If you want to diversify, this is the place to be. Uh, a lot of people think it's just for the U.S. people because as we all know, the fiasco. Well, maybe not. I don't know if it's a fiasco, but when the regulators they really they started to make sure that brokers were abiding by the rules for MetaTrader 4 and 5. A lot of U.S. Clients are not able to trade on a lot of different platforms as they were before internationally, right? And so that cut out the ability to trade indices. So if you were used to trading US 30, you were really sad, or if you were used to trading gold or some of the other things, you would have been very disappointed, uh, and you would have had to change a lot of things to be able to trade on the regulated brokers on in the U.S. And so yeah, that um, that opened the door or to open my eyes to the door of trading futures because you actually do get to trade those things in the US. It's really awesome. Actually, I wish I would have known about it before I knew about Forex. It's really great. I think you're gonna really like this, especially if you like to trade um, fast moving pairs, volatile pairs. Um, but as we always do, adapt. We're going to talk about mindset. We have a little, obviously, adaptability in trading markets. uh, the adaptability, I mean, being able to adapt to the different things that happen in our industry is crucial for your success. You never know what's going to happen governmentally, um, whether it's your country or another country, it still may affect you. And as I know, I think some of even the Mediterranean forest situation that affected, people internationally as well. And it wasn't just a US thing, because I think some people that may have traded prop firms, they had to change the whole dynamic. But being able to adapt to different things in the market is very crucial to um, longevity, in my opinion. Don't be a one trick pony. But we know that the skill set that we've learned in Forex has allotted us to be able to trade futures, trade um, crypto, trade options, lots of different things, because in this company and some other companies, we really focus on the education for technical analysis, especially in strategies and things of that nature. So that helps you to be able to trade in stocks, trade pretty much anything. So whenever somebody talks to me about, oh, I'm not really interested in Forex, I don't want to learn that. Like, well, you're kind of missing out, because you can actually, that can actually go anyway. Do you agree, SM? Like what you've learned in trading Forex has, opened the door for other asset classes that you may have not been, have thought of or whatever.
Yep, yep. No, I fully agree with you still. So yeah.
Hmm. And so, yeah, so we want to always make sure that we are able to change with the times. A lot of this is going to be overview for some of the, just a kind of fast start for you guys, if you want to be able to adapt, because there is a learning curve. Whew, there's a learning curve, guys. You're like, what is this? When you look at the platform, it's not, but don't let it overwhelm you, because it's like, oh, once you figure out, like, oh, that's what we call that over in Forex and vice versa, it's going to, you're like, okay, you can do this. And so um that was the whole point of doing this workshop. And so yeah, let's see. So the key, a few things that we're going to talk about today and on Saturday. We're going to talk about, obviously we're going to give an intro to, trading futures, and how it applies to forex traders. The essential concepts in futures. We're going to define those. We're going to look at the differences between the forex and the futures market. I'll give you kind of like a couple of details, and then I'll give you at a glance, and then we'll go to the charts. Okay. And the good news is, at first, when I first did the boot camp, I did not know where I could actually show you a platform without um, actually getting in trouble with the showing a broker, looking like I'm telling you to go to a broker. So I finally got that under wraps, and I think you guys are going to really like what we have in store for you guys, and over the next 2 days. And then if you guys stick with me, you'll be able to do some other cool things. But I'm waiting to hear back from the platform to see if something is possible. One thing is possible. I don't want to. I'll tell you more about that on Saturday. But yeah, tools for trading, and the things that you're going to need, like the key things, that the key differences. When I hone in on those, risk management is a little bit different, but very similar. I think you're going to like that. But how you calculate it. Once you get a hold on the different asset classes and what they cost, you'll see that it's not very different from uh, how you calculate your um, forex lots and risk management, right? Sandra, she actually had a she was working on something. I'm not sure if she's finished with it, but if she's not, I'm sure she'll let us know at some point. Let us know if she's ready to release that. But in the meantime, I'll show you, how you can actually do it yourself. Like and then there's also some tools out there that you'll be able to use with how, in order to know what to do with that. Okay. All right, so futures trading involves contracts for future assets, just like it says futures. The word futures, it's like your it's like your weight, I mean, for the delivery, like just like you think. Let's kind of let me back up and say, okay, so gold, those types of commodities, oil. Good morning, Wayne. Things like that. Those are physical assets that are traded. And so whenever we see them on Forex, we just kind of like, oh, it's just like it's not computing that it's actual oil. You know what I'm saying? But somewhere, somehow, somebody is trading those items, like physically. Like there's an exchange. Like, oh, you picked up 50,000 gallons or barrels of oil, and somebody got paid, right? um and so with that, futures is a little bit more in your face about that particular, the physicality of that. It's like the futures contracts, they specify deliveries at I mean, a delivery at a set price, and even sometimes like location, once you get into like the licensing and things like that. But the types of we're going to talk about the types of assets that are traded. The most common things are things like obviously indices or equity index rates. Currencies are even traded on the market. They move a little different, but they still they still move. And then commodities, soft commodities, like you can even trade hogs, and yes, I'll say it, HOGS, hogs and cows, soybean, corn, things like that, stuff that my like my father, my grandfather, stuff like that, they actually physically did. I literally can trade that on the markets. It's hilarious to me, right? um Things like that. Let's see, gold, silver, you have metals, but I'm going to show you the actual platform. You're going to be able to get some practice on this. I think you're going to really like this boot camp. Futures markets, they function on exchanges, ensuring transparency and the liquidity for traders. That's one thing I really, really am so grateful for, switching over to the futures market, because there was so much tomfoolery going on with Forex. Man, the transparency is a lot better. You still get a little slippage here and there, depending on your broker, where the speed, and it's just a few other things, but nothing like the crazy stuff that I've seen in Forex. Nothing like that. But the transparency stuff, price is awesome. All right, so then the comparison of futures and Forex, they operate uh, the market hours. One of the major things is the market hours. We know 24/6, basically how we say it. The market operates from Sunday night, because it's Monday in Australia before it's Monday here, but Sunday evening or to Friday, right? And so basically we can trade 6 days a week, give or take, right? Ish, like five and a half, right? And so futures they're a little different. You'll have to, I'll give you the website where, and there's some other assets out there that I'm sorry, platforms out there that you can use to to be able to look at the assets that you're trading and stuff like that. But they all have different uh, ways that you can trade and times that you can trade. Okay. Then the leverage. Leverage ranges in Forex anywhere from, it says 50, but I've seen, excuse me, 25 to 1 and maybe 500. I've even seen some ridiculousness of 1,000 to 1 leverage on forex, but I didn't want to put that. But I've seen that, literally seen that. Futures generally offer a higher leverage, often up to 300. Um, Based on here, it just the leverage is really high in most cases, and uh, but of course it's gonna have a few key factors on it. Okay. All right, and then the contract sizes. Forex has no standard contract size, allowing for a lot of flexibility. Like if you want to do a 10 lot, a 100 lot, a 1 lot, uh, um, a, a point 0.5 lot for your position, you're okay with that. There's a lot of flexibility with your lot sizes, right? But and then you still got to do the math. But in futures, there's a standard. That's one of the key things. There, and we talked about that in great detail in the uh, first training. So if you want to know a little bit more about that, and like I said, I'll be doing some more stuff with futures, give you some more insight. um, but for now, if you want to just get a little bit more details about the contracts and like the assets themselves, the differences in them, you're going to want to go to the first boot camp. And like I said, it's only 5 days, but yeah, I go into a little bit more details. But you have clear, defined uh, contracts to show you. For you to be able to trade. Okay, so the contract size is major, one of the major things, especially with the risk management, obviously. All right, so and then the market participants, obviously, we as retail traders make up the majority of the forex markets, but the big fish, they put more money in, but it's less of those seemingly, right? But that's why, as little trade, the little fish in the sea, but lots of fishes in the sea, we really like to trade things like indices because it's got a lot of volatility, but because of it's more money, institutional money present in those, that's why you get that great movement. And so futures no different, because we're trading U30, um, S&P 500, things like that, NAS. Uh, a lot of institutional investors and such are present in that market. That's where a lot of the money comes from. And of course, our 2 cent, right? And if you guys have any questions, feel free to drop them in the chat. Definitely, this is what that is going to be about. And Saturday is going to be very open as well. A lot, even more open on Saturday. But yeah. So the liquidity, like this, the significance. Advantages of trading the futures market. Like I said earlier, the liquidity, obviously, you get a lot of volatility, a lot of movement, um, particularly in major contracts. That helps you to be able to enter and exit, and you don't have to stay in trades days on days. Nothing wrong with that, SM to G, we know if he's one of the masters of that. But sometimes, if you want to hit your targets quicker, a lot of times this is a great option. Okay. All right, and then the transparency, like I said earlier, it just, the prices, they're regulated on exchanges, so they have to abide by the rules or they get in trouble. That helps us to have less manipulation in the market, like unlike forex, right? And also crypto, and that's the worst. That's the worst. I just know way too much behind the scenes for crypto, and yeah, just a lot of manipulation. All right, so diverse
Mrs.
instruments.
Bridge.
Yes, sir.
So I'll be back here. I'm just going to shop quick.
Okay, sounds good. All right, so diverse instruments, they provide like a lot of different asset classes. Like I said, it's not just the indices or anything, but you have a lot of different options to trade. I know they even just added cryptocurrency on there as well. Yesterday, I don't know if it was actually yesterday, but actually yesterday, the CME group, they actually added another gold. Um, asset for trading. I don't see it on the practice thing, but I'm gonna ask about that. But they have another opportunity for more people to be able to trade gold on the platform. But I'm gonna show you about, show you what that looks like. Okay, when we get to the end. But yeah, so hedging opportunities, futures contracts can be effective hedges against price volatility in foreign exchange um, transactions. To stabilize pricing. A lot of companies utilize hedging, or forward contracts. Yeah, it gets a little bit deep, but I won't. I'm gonna try to stay surface level here in this one. Like I said, I will do more stuff in the down the line. I hate saying in the future for futures. This sounds so crazy, but yeah, understanding futures contracts. The I've already given you the definition, but just for the sake of the PowerPoint, a futures contract commits to the buyer to purchase and the seller to sell an asset at a predetermined price on a set date. And that's what, and because it's done on an exchange, it's a contract, and that's what gives way to the transparency of that market, right? And it being you having to abide by the rules, and it's legally binding. um, Underlying assets. This refers to the assets that are being bought or sold in the futures contract, which can be commodities, currencies, financial instruments. Okay. Contract sizes. Like I said, that's one of the major things in here. And then a lot, like one of the, in my opinion, the biggest thing, expiration date. And that's what gives it the weird uh, IDs. Like whenever you see it, you're gonna be like, what are those numbers? What are those letters after the the asset? Like YM is US 30, but on certain brokers, you're going to see YM H25 or 424. You're going to be like, or M24. It's like the expiration date is one of the major differences. And when I saw that, when it first started to trade, I was like, well, that was weird. But what all that is each futures contract has a specific expiration date, making the point when when the contract must be settled or rolled over. So you're going to have a yeah, actually, yeah, that is correct, Matthew. Let me show your I have to post that because somebody sent me a message saying, "Who are you answering?" But yes, it is like options, very similar to options trading. Okay. Actually, you can from this, you definitely can trade options. It's gonna open a door for that too, depending on the platform you're on. But yeah, so settle, it has to be settled or roll. You have an option to roll it over. But yeah, then the price in the futures contract is agreed upon, and the underlying asset will be bought or sold at that expiration date. So those are the key components, the things that make it like different, right? Sorry, we got a trade idea that popped up. Sorry, but we're not gonna look at it. We're gonna refrain from doing it right now. All right, so commodities futures, these contracts involve agriculture, metals, energy resources. The financial aspects of the contracts are more about based on stocks, indices, interest rates, different currencies. And then the currency futures are forex traders to help use these contracts to hedge against current currency risk. All right, and you're gonna see, but like I said, like a lot of them, depending on the pair, for the actual forex ones, they don't move, they don't really have a lot of volume, as much volume as I thought would be in there, right? Let's see where we at. Okay, so margin. Gonna speed through this so we can get to some of the main key functions. I want to get to the platform at least by today and get you started so you guys can create your account. But the margin and the leverage in futures trading. Um, like like we said, margin is the capital. Well, we all know margin is the capital required to open and maintain a futures position, just like it is in forex. You need capital, and then leverage is amplifies the potential risk and returns, showing like the 50 to 1 instead. Like you can choose your leverage usually in forex, and I don't see, at least on the exchanges I've been on so far, I haven't been able to change my leverage like some of the forex brokers that I used to deal with. Um, Not so much so the ones currently that I use. But yeah, margin usage with 10% margin on a $10,000 contract, you'll only need $1,000 to control it. So, but just for the sake of not getting bogged down in the details, we're gonna not go over that. But I just wanted to make sure that the similar, but there's some advantages in futures, it being a little bit more volatile and things of that nature. All right, so choosing a futures platform, I cannot help you out. I mean, outside of right here, but you're going to be able to easily research futures brokers, and they even have prop firms, just so you know. And there's some that have been out there even longer. I mean, just for a very, very long time. Um, Choosing a futures platform, um, always look at a few things. Obviously, I'm going to start with the most important to me: customer support, the reliability of a customer, to be able customer support to be able to resolve my issues, to ensure, you know, no issues, right? And I put that first. I mean, I say that first because that is the most important. Commission structures, evaluate different commissions, making sure, just like you would on the forex thing, you want to make sure that the split, what the fees that you're being charged. You should. It's not as bad as forex, I promise you. But you definitely want to be aware of what the cost of doing business is. Access to tools and research. Um, yeah, just making sure that just looking at the platform itself, I think is super important. And the user friendly, is it really complicated to use the broker? Is it crazy to use that trading platform? So you just want to make sure especially starting out, you just want it to be easy, right? All right. Steps to you research the broker. Usually it's really, really fast. I've seen some forex ones take a minute, but it doesn't really take that long. 1 to 2 days at max. Usually it's pretty instant. But once you make your deposit, they don't have a lot of them out there that have like demo accounts, unfortunately. But from what I've seen, but there are a few that do might give you like a 14-day, 2 week, but maybe there's some more out there now, because they're really becoming popular. Futures. But usually you have to just complete a little application. It's nothing, too strenuous or whatever. Don't be afraid when what you see on this chart. They don't. Not all of them ask about financial information, but it just just the basics, right, for any broker. Um, but as with all of them, you still always have to verify your identity. Um, let's see. But the reason I think that being a forex trader, offers an easy transition is because you already know how to read the charts. You probably already have a strategy, and whatever strategy you're using on U30, you can use it on futures. So easy, just the same thing. You just need to understand the platform. It's just really learning the platform and the software, uh, the platform, the software, and just once you decide on the pairs that you want to trade. And all right. So, and then the risk management, um, you just want to, the same thing. You have a percentage dollar amount, just like you did. We just went through the long, risk management, trade management. I really wanted to talk about some of the of the futures ones. I probably should have done like one more day just focusing on futures so it would be separate in the part, but maybe I'll do that later. But position sizing, once you guys get started and you get to understand it, I'll definitely revisit that the risk management component. Okay. All right. So just like we won't spend too much time on this, but just you want to obviously you want to trade the trend. It's a dream for scalpers, but I've seen where you don't. It's not just scalping. You can trade. You can trade anywhere from a few seconds, like literally, you can make hundreds or thousands, tens of thousands. Any uh, you could possibly make a large amount of money in a very, very short amount of time with this. And so, like I said, they do have prop firms, uh, and you can sometimes you have some of the brokers or platforms that you can trade on allow you to copy trade, which makes it really ridiculous. Where as you when I show you what the contracts are, you're going to be like, okay, and you're copy trading all at the same time. It gets really amazing, right? So you can trade ranges because on a high, a higher time frame analysis. But just always know about the your spread and how much it costs to do business, like to enter a trade. And another thing I don't have on the charts of this one, but the previous training, it's really important to know the time of day that you're trading. Volatility and volume are super important when it comes to getting more bang for your buck, because the less people that are in the market, or the less volume that's in the market, the uh, it costs more to trade. It's weird, but it is. But that's why it's super important to demo it once you get the account. But like I said earlier, a lot of the companies don't allow you to demo until you actually get buy an account or whatever. But there are a few out there that will allow you. So, but you just have to do your research. Unfortunately, I can't say it, but at least on the platform that I'm going to show you guys today, you will be able to practice and hopefully you'll be able to see what I'm talking about. All right. All right. And then, so just like with Forex news, um, is crucial to trading. Charting, like I said, that's your advantage as a forex trader. You already trade in this manner, fundamentals, technical, and the only thing the learning curve is the trading, the software of the platform. And we all kind of went through that when MetaTrader 4 and 5 disappeared from some of the platforms that you may have been trading on, right? You had to learn maybe Trade Locker or some other broker. I mean, not broker. I think it's platform, right? I think I said that wrong. But yeah, so but yeah, and then once you master the idea behind the risk management, it's very similar to forex, and but it's just how you calculate the lots and well, I'm sorry. Well, I'll just say lots because some of you guys haven't traded this. How you calculate the money part of it. Okay. Some of the yeah, uh, the some of the common mistakes in trading is similar to forex: over leveraging, doing too much. You're just doing too much. Don't do too much, especially when you're coming out the gate. And you can do micros instead of minis, and just understanding the cost of each asset that you choose to trade. Don't chase your losses. And like if you lose, don't try to beat the market. It's just basically the same. There's no different. Ignoring risk management, you have to have a plan or you plan to fail, right? And lack of research. You need to research the asset class and understand a lot more. You need to understand about what you're trading. There's some really cool stuff out there um, that might tempt you to trade. You might want to trade, but if you don't know anything about how and when that market moves, that might lead to stagnant. Uh, trades that should have been, I mean, shouldn't take that long, or maybe you got in at the wrong time of day and it's already made its move. But um, some of the kind of different ones, especially the agriculture stuff that I've noticed. Yeah, so you want to research any odd things that you maybe want to try out. You want to test it out on demo first, okay? All right. Let's see. Yeah, just like with anything else, continuous education, um, understanding the contract sizes, and effective risk management. If you don't take anything else away um, from this talk, those are the key things. The platform, understanding the platform, always be a student, and master the risk management component. All right, so just a little bit more about the liquidity for the, between forex and futures. High liquidity, um, it's kind of like, I wouldn't say, oh, good deal. I kind of would say more like GJ. Um, it's a lot of people that trade GJ, or is, well, that's the most volatile pair I've seen on a regular forex chart. Right, there are some ones that give some good movement. These are good steady pairs. U30, I'm sorry, I mean, EU, GU, those are real good sturdy pairs, but a lot of people participate in those markets, but they are highly manipulated. But and they can also, and as SM loves to trade these exotic backwood, uh, backdoor. I knew he was gonna laugh. He likes
Yeah.
to trade those weird things like TB something H. I was like, what is this? I don't know. I know that's probably not a pair, but he has some Singapore and all kinds of different things that he trades in his repertoire. But those give lots of liquidity, and you get some really good pips out of that. And so with futures, depending on the contract, like S&P 500, crude oil, I would say more like NAS because of how it's calculated. And like I said, if you want to learn more about how they're calculated, go to the other one. While the other ones are a little bit slower and a little bit more steady, but you might want steady, right? I like steady in volume. I like steady and volume. But let's see. Some of the brokers charge a commission on top of the spreads with forex, as we know. But and the spread is basically the difference between the bid and the ask. And so knowing that in forex, that's just an added price cost. But futures, the cost is the exchange fee, the broker commissions, and the bid ask spreads. Those are some of the just so those are just the basics. There's no swap fees since they settle every single day, and like I said, we talked about that a lot on the first one. But yeah, okay. um let's see, I won't get too much into this because if you've been doing trading for a bit, you already know how to calculate your lot sizes for your forex. The only thing is like with the futures, it's a fixed contract. Like, so say I want to trade U30, it's going to be called YM on the platform that I trade on the futures. But I get to choose if I want the standard $5 per tick, or I want the 50 cent per tick. I don't have to do no zero point 0.5 times 10 equal be equal $5 per pick. I don't have to do any of that, right? And so it's a standard lot, it's a standard size, position size, for the dollar amount per tick. So you're gonna know that coming in off the gate. Like, okay, if I do this every tick, every point or pip, that's another major thing. I don't know. I probably should have put that. I don't know. Did I do that slide? Yep. Nope. I don't think I did that. I forgot to do that side. So the pip, the major difference in the platform is one of the major differences is pips are calculated, and sometimes we have points, right, for gold and things such, and U30 and stuff like that, depending on the broker. But um, in on the futures platform, everything is calculated in ticks. Have you ever gone to that position tool, long and short position tool, and it gave it to you in some weird number? You're like, that's not what that is, and it says ticks. That's what this is. So it gives it to you in ticks, right? Um, and so let me show you. It's a lot less on the futures. There's no flexibility when you decide, as far as like very good question. I was about to get to that, Matthew. Yes. And the answer is yes. You can scale by yes. And so that's not only can you copy trade on some of the platforms, not all of them offer that. Some of them strongly suggest against that. I'm not telling you to copy trade. I'm just telling you that some of them out there do that. Okay. But the way you increase the dollar amount for making the ticks is like you have that fixed standard contract at $5 per se, right? For U30 for YM. And now, if I want to do um, 3 lots or 3 contracts, that's the same thing as saying $15 per tick. Okay. And if I want to do 30 contracts, multiply 30 times the actual standard standard contract size of the dollar amount. Okay. And so that's the only math you do. You multiply however many contracts you choose to purchase times the actual contract with that asset. And if $5 is too much and you still maybe you have a B plus setup, you're like, well, I want to get into this trade, but it's kind of like, I want to, but I don't want to risk as much. I don't want to risk the whole $5 on there. So you might want to go down to a mini. And I'm sorry, the micro. The micro is point 0.5, and so that's 50 cents per contract. So instead of $5 whole, you got 50 cents. So you can do 30 contracts. So that'd be 30 times five, and or two times 50 cents. That's $1. And so yeah, per tick. And so that's the only thing you have to remember is uh, the the dollar amount per contract. And the tricky thing about well, let me not get to that. Let me get through these real quick. I'm gonna show you. But like I said earlier, we talked about the settlement price. You can trade future. You can trade forex forever. But futures, they have an expiration date, and usually they are settled at the end of day or the close of day. Excuse my typo. You have to choose to submit it to roll it over. Let's see. All right, so the platform features, we've kind of talked about a little bit of that. And ignore, let me just bypass that, because but we have a lot. There are a lot of them out there, very reputable. I don't have I can't tell you because that's not my job, but you do your own research. You want to look at their payout ability. Also, I should have put that one on that slide, but make sure that you're able to reach customer service, see the reviews on social media. You want to make sure that those brokers are doing what they're supposed to do when it comes to your payouts, okay, or your or the especially the prop firms. You want to make sure that they have a good reputation, okay. So not only easy to use, and they have a good reputation especially with the payouts, and obviously being able to talk to customer service, super important. But yeah, just at a glance, like we talked about, the pips versus the ticks, how you calculate positions and lots versus micro mini contracts, And then execution is still buy and sell, but there are ways that you can scale into a position. Like, oh, I should have. I don't want to. I don't want to. Let me add some more to it. There's way to scale into a position and out of a position, and so you can add to it and take away. And it's going to depend on the broker, the verbiage that I've noticed that they use on how to add to it. Okay, join bid, ask, join bid, or join ask and stuff. That's kind of how it says on some of them. But like I said, it might vary depending on your broker. But on the platform that I'm about to show you, I don't think that's an option, but you're going to see. You're definitely going to see that. Okay. To close it or to take profit, you're going to close the position or flatten, or it might have something like that says close all positions or close positions, and you're going to want to make sure that that's if you're that uh, you look at that every now and again. If you trade multiple pairs at the same time and you're in, like, maybe for a longer period of time, or maybe an hour or so, 2 hours, or maybe the day, you're going to want to make sure that you flatten your positions, or look at that to make sure nothing's still running, because it's nothing worse than be like, "Oh, I was in profit." um, but the good news is I know on this on some of the platforms or the brokers, they have the ability to trail your stops. They have a lot of really good risk management tools within there. And knowing how to scale in and out of the position is really something you want to master in your practice before you get involved. But you can, if you just want to get started, yes, you can execute a trade and exit the trade. And you can also put your stop loss and your take profit. Good news is pretty much the same. And also you can also trade from a few brokers from the trading view platform. You can connect your broker or your prop firm to the to trading view, and so you can even adjust your entries from the long and short position, the red and the green thing that pops up. You can actually literally adjust your positions from moving that. It's really cool. But yeah, so let's see what else is different. Yeah, the names, obviously, and like I said, we went over that in great detail on the other one, and I'm going to show you. And I just put a couple of them up here, over here to the right, where it says U30. You're just trading YM. That's the base of the and of the asset. And so the basis of it is YM. You might see some extra letters behind it, but the this says YM, and these are mini contracts. Repeat after me. These are minis. And anytime you want to trade a micro, all you do is pop a M in front of it. It's going to say MNQ for NAS, or MGC for the regular gold, and then MCL for the lower dollar amount. And when I say micro, that means it's just a lower dollar amount. Okay. Um, so with the thing that got me most when I first started trading futures was the dollar amount. Oops. The All these are different. Like, the contracts they're standard, they're fixed, but they're all different. Like, for instance, uh, U30 is $5 on the minis, is $5 per tick, right? And then NAS is also $5. But let me tell you, these are different. The way they calculate fast, yeah, it's just NAS is really crazy on this one as well. Yep, that's all I'm gonna say about that. So a little goes a long way. A little goes a long way. That's what I'm gonna warn you about. So be ready. Practice a lot on NAS on the platform before you put your money in there. Okay. U30 is one of the smoother ones in my opinion, $5 for U30, $5 for NAS, $10 for gold, and I think 10, 10, and 10 for these. Someone correct me if I'm wrong, but I think all of these are $10 per tick. And then this one right here, SPY, is actually, or SPX is actually $12.50 per tick for the minis. And then for the micros, um, this will be 50 cents. With the, you just put the M in front of it, and it's like 50 cents. And the MES, that would be $1.25 per tick. This one will be 50 cent per tick, and it's just an M in front of each and every one of them. This one will be $1 per tick, $1 per tick, $1 per tick. Okay. All right. Those are the major differences. And we already talked about the time. You have to actually go to CME.com. And so now we're at that point where I want you to screenshot this page. Okay. Give you a second to screenshot this page. I want you to create an account. It's free to do. And this is one of the reason I do this so freely is because this is an exchange group. This is not a broker. You're not putting real money in it. It is a simulation, and you these are one of the regulators. Basically, is one of the regulators, and so you can actually see how it actually moves. Now, another major difference. Something that you want to know. Gonna want to know. Let me. Okay, so does everybody have that? I'm just going to pause for 2 more seconds, but you can always rewind back to this moment in time. But to keep things moving, screenshot this, and let me share my screen. Okay. Futures. Let me fix it first. Give me 1 second, guys. All right. Okay, so I'm going to go to this page right here. Stop share. I wish there was a way that I could just flip back and forth. All right. All right. So once you go here, you're going to go up here to the top right to the cmegroup.com, and you're going to create an account. So you set your alerts and, have it to the email that you want, to get your, your updates and all of the information about the company. They will send you emails, trust me. But okay, and then the second thing I want you to do is, let's see, let's go over here to the markets. So if you want to understand a little bit more about, the difference in the assets and the asset classes, these are it at a glance. And so they have some of them spelled out right here. Some of the more, you can see all the products, or these are the top ones that are often used: corn, soybean oil, natural gas, S&P 500, NASDAQ, or whatever. And so you have the little the what it's called over here, zinc. I'm sorry, my chemistry's kicking in. So I'm sorry, that's not zinc. ZC, ZN, I think. But anyway, so ZC is corn, and so that would be what you would look up on the trading view. So these are the first digits that you would click on in trading view, and I'm going to show you how to do all that between today and Saturday. But yeah, so if you want to see all the products, you can. And here you go. And it just lists them, each and every one, right? And so what is it? Let's see. And so if you want to learn a little bit more about, let's find one that we want to see. Let's see one that we might be. Okay, let's do gold futures. So I'm clicking on that one. And this will take me to the actual page so I can learn a little bit more about each one. Each 100 troy ounces of gold, and it tells me the trading hours that we were talking about early, and then the cost. And this is how much you get per tick right there. $10 per tick for the regular GC contract. If I want to do $1, I would have to click on, I would have to type, click on the micros, and it will be um, 1.0. All right, let me go back. Let me go back to the markets. So you click on markets, all right, and it'll bring you down here. And then if you want to go at them by groups, if you just want to see them in groups, so say you're like, no, I don't know if I want to learn a little bit more about oil and gas. Click on that, and it'll break down the oil and the gas um, information. So you have an overview, you have the actual products, and they give you like I said, the products, they give you like all the ones in this grouping. Okay. And then the data is going to take you to, well, you got to click on, actually you have to click on so if I want to do crude oil CL, and you see these digits afterwards, that's what I was talking about. Can y'all see that? I know it says H5 and it's really small, but if I click on here, it's going to take me to the overview for that. And then if I want to understand a little bit more about like that page, I want to go to the specs. Okay. And the specs sheet, that's going to give you information about each, how much it costs, when it's traded, where can I trade it, I mean, what it's regulated by, all of that good stuff. Okay. So yep, $10 per tick, and these are the times. All right. So not to beat a dead horse, but just so you can find out a little bit more. And if you have trouble finding something, feel free to send me a send me a message, and I'll be more than happy to help you. Okay. So if you were on the home page, or if you wherever you were and you want to get to the trading simulator, I want you to go to education. Click on under education, under practice, you want to go to trading simulator. That's all I did. So education, practice, trading simulator, right? And so this is where you're going to get to practice. Ta-da! All that to get to here, right? And I'm going to show you on, this is a version of Trading View, right? And so this is the major thing is, okay, I've shown you these I guess the acronym, or the in short for S&P 500, the equities index, they're categorized by groups here. So these are all the indices. The equity index are the indices. That's the same thing as index. Okay, so you got nickel 225. I forgot which one that is. Don't hold it to me. But it says. But then we have the Dow. That's S&P 500. That's the Russell. I played around with Russell, but that one's pretty cool. Nasdaq, S&P 500, and these are all of the larger ones, right? But if I wanted to see this, let me stay focused. All right, so energy is going to be just like we were talking about: crude oil, gasoline, natural gas, all that good stuff. Metals, obviously, is you know Captain Obvious here: copper, platinum, gold, aluminum, um, and then we have at Forex. Like I said, you can actually trade the actual pair. Let me click on one for you. So this is a 5-minute chart that looks much different than um, let's see, go down to a 1-minute chart. They literally, I think they just added that feature. But it felt like whenever I trade this, or at least the time of day is so crucial, guys. When I say depending on the time of day you trade in that asset, you are going to need to master the time of day that you trade whatever, because You want movement. You do not want stagnant markets. This is what that looks like. Two, three, four, and then a move, and then it went down, and then it went up. It's just weird. Two, three, four, five, six, and then it went down. So knowing the time, especially on if you're like a scalper, you're definitely gonna want to master the times. Okay, I just wanted to make sure I showed you an example of why it's important to do that. Okay, all right, and so the interest rates, you can trade the interest rates. Um, the treasury bonds, U.S. Treasury bonds, the T bonds, and all of that good stuff. You can trade that. I haven't messed around with that yet, but you know, I'm open. But then we have corn, like I said, soybean, and like I said, yeah, knowing the time of day and the time that your pair moves, super important. We like that a lot better than, let's see, get back over there. Over here, we like that better than this, right? Volume is important. All right. So time of day matters. Um, and whenever you come over here, make sure you know, click the correct time zone. I have mine keeps flipping to a different time zone, so just always kind of glance there, and wherever you living in the world, that it's on there. And so it doesn't. Mine hasn't. I haven't been able to make mine stay. Maybe I'll inquire why that is, but for the most part. It's just similar to TradingView, but make sure that you're looking at the correct time zone so you can evaluate the when you're doing your back testing. Okay, and you can add indicators here. It's just the basics, like most uh, uh, platforms that they pay for their usual. So you can put your little moving averages. Can't put a indicator on here, but you can at least kind of give a uh, get an idea. Okay. The other thing is, let me see, micros. That's what I wanted to get to. Micros is pretty much all of the other ones that we just saw with the M in front of it. Remember how I was telling you the M, ES, and that's ES is your regular ES, what S&P 500. All right. Sorry, another opportunity just gone. but but yeah, so Nasdaq and stuff like that. So MNQ M2 K, and then those last two digits represent the month. The letter represents the month that the expiration date goes out, and then five is the last digit of the year. So now it used to probably would say four last year, but all of the contracts should be closed from last year. So if this is March, I'm not sure what this represents. The H, I'd have to pull up a chart, but like I said, it's on the other one, or actually it's on this website. You can find all of that information. But if you want to, it is. I'll probably create the little nomenclature for you for next week, for tomorrow. I mean, I'm sorry, Saturday's class, so you'll know what the letters are at a glance. But the um, as far as the digit on the end, that should be the year, and then the letter should be the month that it's actually expiring. Okay. And that is important. Why, guys? Because you want to know, like, let's see. So they'll have like usually on the broker, it's gonna uh some of the brokers will mitigate that issue trying to figure out which contract. And if you're in an old contract, it gets a little bit tricky, a lot tricky actually, if you don't know. And so say a contract ends like now, right? Now a contract is now there's a contract ending this in March, right? So from January to March, most people are going to be in that contract, but there are going to be opportunities for future contracts to be closed. And so a future contract might be ending in June. Another contract, they have a whole nother contract. And so that other one, there are going to be some people in there because they're hedging, or they're projecting a price for to protect something that they're going to be selling down the line. So maybe it's a crop, or whatever that doesn't come to fruition. I can't buy it until like June, right? And so they're going to have some contracts out there in the future, way out in the future, maybe even December. And so you're going to see a lot of this all day. You're going to hardly see anything in the market. There's hardly nothing in the market. It's not moving, but it'll be there. But so understanding that you want to be in the current contract, okay, the current time, super important. Cryptos, the only two that I've seen so far are Ethereum and Bitcoin, and you can have your watch list just like you would in TradingView. And so all you do is type it in and it'll add it. Okay. All right. And so on Saturday, since we're at the end of the class, let me just show you how. Just 1 second. So if I'm on a minute chart, I want to be on the chart that I want to trade on. And so, but just your homework today is to create an account. That's all I want you to do. And all right, so let me go back over here. So trade, if I want to trade that actual that asset, if I want to I can do limit orders, I can do a market order and all of that good stuff. I just have to remember to do this, but we're going to go over all of that on Saturday. Okay? So that is basically oh yeah. So see what I'm talking about? So you have a March contract, you have a June contract, you have a September contract, you have a December, and see how the last digit changes? 6. All right. So I think that's enough for today, but this should at least get you started, and we will get into the practicality of it, Saturday, and how you actually enter it. Unfortunately, the markets will be closed, as always, but I still want to keep this short. And like I said, I'm working on something that you guys really might like, but I don't want to get your hopes up too much for what it might be. But to help you to get started and to get the practice that you need. But SGT, like scalping, strategies that use scalping is fire for this, but I'll show you guys that this week. Okay. All right, guys. Thank you, Wave Trader. That was very kind. But thank you, guys. I hope that you guys learned something. It's not scary at all, guys. This was the basics, and like I said, Saturday we're gonna get into how it looks on TradingView, how to look it up on TradingView, all of this. But you're gonna love this. I'm I just I wish I could have found it sooner. SEM, would you like to say something to the peoples?
Nah, everyone just enjoy the rest of your day and obviously just plan your trade and trade your plan. But yeah, I'll catch you later on.
Awesome.
Enjoy.
Awesome. All right. Thanks, guys. And hi, thank you, Deborah. All right. Bye bye.
Yeah, bye everyone.